Hi there, this is Sandra with the Mortgage Center. I am so happy that you joined me today. This is a special message for realtors. We just love helping realtors and working with them. And I know this is sort of a challenging market, but it's an opportunity to sharpen your skills as a talented sales professional. Today, I wanted just to share with you what we're seeing in our office and what we're expecting with interest rates in the next month or so. So as you know, inflation continues to be a problem, and that's why the Bank of Canada made an unexpected rate announcement a few weeks ago and increased its overnight lending rate by 1%. And that kind of shocked the system. And what we're actually seeing right now, and I was just reading something in the New York Times, is that in the US, they're starting to see a bit of inflation slow down, which is good news. And that'll probably trickle down to Canada eventually. So, what we've actually seen is increases in the overnight lending rate, which impacts the different mortgage prime rates. And we're likely going to see another increase in September. Now, the really interesting thing about this is that we've actually seen some downward pressure on fixed rate mortgages, especially 5-year fixed rate mortgages. So, for example, just a couple of weeks ago, 5-year fixed rate mortgage was just over 4%, just over 5%. Now it's you can get many 5-year fixed rate mortgages at 4.5%. And the reason why that's happened is the activity in the bond market. So remember, the 5-year bond yields influence 5-year fixed rate mortgages, and the overnight lending rate impacts the mortgage prime rates, which that influences variable rate mortgages. So I just had a chance to look at the bond market right now, and it's starting to kind of creep up again. So what we're going to probably see is fixed starting to climb again. So what are we telling clients? For those of you who have clients who are first-time home buyers or looking to buy within the next 120 days, we are recommending that all of our clients get pre-approved, set their interest rate, especially if they're choosing a 5-year fixed rate, for another 120 days. And so that's a great idea because it'll help them lock in on the lower rate today. Because again, we're starting to see the bond yields trending upward. So I'm expecting that the 5-year fixed rates are going to be climbing. For clients, and I don't know how many of you have them who are renewing mortgages. I don't know if you're even interested in that. We are also telling our clients, those of you who want a fixed rate mortgages and your mortgage is renewing in another 6 months to 8 months, renew early. Now, there might be a penalty, but when you're transferring a mortgage from one institution or another to another institution, just to get a better rate, the new lender will allow borrowers to capitalize some of that penalty into the mortgage. So there probably would be no out-of-pocket expenses, but that's what we're telling our clients. And then I'm not sure how many of you are putting offers in without any conditions, but I've noticed in our office that that trend has gone away. Most of the offers that we're seeing in our office now have conditions of financing. I also have seen conditions with home inspections and obviously a sale of home conditions, because for a while there we were dealing with a few clients who were trying to close on their purchase, but they still hadn't sold their existing home. So love working with realtors. I hope this message finds you in a really positive summer mood. And if you'd like to reach out to me, I'm always available. You can go to my website at skipthebank.ca and schedule an appointment from there, or just go to my website and connect with me there via email or give me a call. Have a great day. Bye for now.